The silver price is down, but not for long. Good morning, stackers. This is your precious metals price update for the 1st of August, brand new month, 2025, with me, Joe Main, brought to you by Perth Bullion Exchange, perthbullion.com.au, and masteringthemarkets.com. Let's do a quick synchronized slurp. Grab your tasty beverage. All right, here is silver on the, what are we looking at? Daily time frame priced in US dollars. We have $36.65 US cents. Silver is heading down, but I don't think for too long. Could it be turning around about here? Sure, could be. But over the last few bits of content on both the live shows, go live on Tuesdays and Thursdays, and on the individual pre-records, we've been talking about silver's 1, 2, 3, 4, 5 Elliott wave move. Again, I'm not a huge Elliott wave expert, but I'm sort of learning as I go. And the ABC retracement. Then when we combine it with some bearish divergence on the relative strength index as well. So we came up with that move right there between this move here, the third wave, and the fifth wave. You can see pretty clearly we have some bearish divergence. What that means is you have a higher high on the price, and then you have an equal or lower high on the relative strength index. So the two things are diverging from each other. Okay, so that's, and particularly my understanding is between the third and the fifth waves, if you get bearish divergence on their higher high, low high, that's very, very likely that you get a retracement. And that retracement could be this ABC wave, right here, ABC, and when you combine it with the Fibonacci from this low and this high, the expected support range, or the zag zone, is somewhere in this green box right here, somewhere between the 0.618 and the 0.382 from this low and this high, and that's sitting at anywhere between $35.30 roughly, anywhere down to $32.60. Now, my opinion, which is purely just my opinion, is I don't think we get, if we do continue down from here, we will not get down into that $33, $32.60 kind of level. Why? Because you've got this previous sort of $34 to $35 level major resistance there, which we just faffed around for a bit. So that eventually got broken. You'd have to be asking yourself, if you get down below here, if that goes down below there, even though technically you're still within the zag zone, you're still within that zone, it's still technically okay, that's fine. You have to ask yourself, the question is, why are the sellers here, why are they not becoming buyers here? So that's why my preference is, and my opinion is, if we go down further, probably no lower than between that $35.30 to $34 area. So 34 to 35-ish is my opinion at this stage. And what would negate that? Obviously, just bouncing off this 0.236 area and doing something like that, whatever that is, ignore the pattern, ignore the time frame, would negate this further move. But at this stage, I'm sort of 80% sure of that. So that's my opinion on silver at the moment, but I think it will continue down, but not for long. Around about there, and then I think that the buyers will step in. Previous resistance will become support at around this general area. And then, as you know, I believe silver over the longer term, it will break it'll break the all-time high finally after 45 bloody years since 1980. Okay, it will do that. And then we will be onwards and upwards. If I just show you, get rid of all that stuff here, of course. You know it, I've shown it a million times before, the ultimate head and shoulders pattern, 45 years in the making. It will do this, little bits of ups and downs, but we're going to $50. Once we break 50, we'll be in price discovery. Never been there before, ever. The only asset in recorded history that, as far as we're aware, that has never broken its 1980 price. Every other asset has done it except for silver. Why would that be? Manipulation, most likely. For larger reasons, don't know. But it will break 50 eventually, and then we'll talk about higher prices where we've never been before. Very confident triple-digit US dollar silver will be coming eventually down the track. Don't know when, don't ask me for a time frame. And maybe as high over a much longer period, several hundred, but even up to like $700, and that's just in a normal market, many years like down the track potentially. But yeah, triple digit silver, no problem in just a few short years, I think is quite doable. So this is just a little blip along the way, a little bit down. Let's find that resistance, that support at about that 35.30 to 34 US dollars, and I think we're looking really good. Okay, that is silver. Let's take a quick look at, we'll do gold, platinum, and copper today as well. Hit the big red subscribe button to join the GMS family. I do pre-records and I do live shows as well. Here is gold on the daily time frame, US dollars, 3,287, still holding it. So still holding. The bottom end of that zag zone from this high and this low, that is sitting at $32.65 roughly. So we're still in that range. You've just got to watch here. Okay, $32.65 roughly. If we start breaking and holding below there, no bueno, and we're at least probably testing that $3,200 level, but you just don't want to see it break out of that range, break down through that range, preferably not. Cool. So bit of a trading range at the moment. I'm not going to say, oh, definitely going up from here, definitely going down from here. I'm like in just 50-50, no man's land at the moment. If it starts closing above that 3355 mark, $3,355, then I'll go, okay, right, well, okay. Resistance, we broke through, we failed to hold it. If we do it this time, if we do something like that, and you do like that, ish, preferably, above here, preferably above there. So do something like that. Then you'll say, okay, look, really confident that a new all-time high in gold is coming really soon in just a matter of, weeks, not months and months and months. What we do when we get to make a new all-time high, I don't know from there. We'll have to assess that when we get there. And as I've been saying previously as well, you've got to watch out for the alternate case, which is we do continue heading down from here. Actually, I have to put that back on. And I have been saying, watch out for, get rid of you and you, watch out for, it was a larger move. Yeah, there we go. Watch out for anywhere down to this area here. I think I would favor that sort of $2,800 level. I'm not saying it's going to there. I'm just saying just watch out. If we do start ticking down further from here, you could say that we are potentially breaking market structure on the weekly time frame. That would probably be, I'd say breaking on the weekly time frame would be right here. So if you don't bounce at about 3,130, then I'd be pretty darn confident that you'd be coming down to around about that $2,800 level. And don't forget though, that's really quite normal, very normal. If I show you on the monthly time frame here on the logarithmic scale, 1980, 2011, coming back, breaking out of the mother of all trend lines. We eventually did it. Coming up, breaking out and retesting a major trend line is completely normal, and would be actually really bullish to have a bit of a downward move, bounce off that $2,800 level, and then mate, onwards and upwards to there. If you do this, I'm not saying it's happening in this way or this time frame, but if you do something like that and that clears there, that is go time for gold over the much longer term as well. Okay, even if you do that, that's the same thing. But anywhere down to that 2,800, I would not want to see gold break below that trend line. Preferably, thank you. Okay, yeah, technically you can get into this area, but it's not preferable. Okay, for me at least. If you have a differing opinion, let me know. That is gold. Let's take a look at platinum. Here is, where are we? Here is, so I'll go back. Here is platinum on the monthly time frame, priced in USD, 1,290 US dollars. As you know, it's broken out of that accumulation range. It's looking great. We're making higher highs now on the monthly time frame. Uber bullish. The first time we've made a higher high in platinum since February of 2021. Then massive consolidation since then, broke out, made a higher high on the monthly, looking good. A little bit of a consolidation back down. What goes up must come down. That's what markets do. On the weekly, yeah, we were in extremely overvalued, overbought on the weekly time frame on platinum. So expecting a dip here, completely reasonable. If I show you on the daily time frame, that's similar thing where you've got the bearish divergence we've been talking about, higher high, lower high in the relative strength index. So we were positing that we would see some lower price movement, and it is now currently in the current best buy zone. And that's from, I might have this one drawn in wrong, but I'm taking it from this low and this high rather than from this low down here. That could be wrong, but look, in this general area, even if you take it and it's from here to here, it's not that much of a difference, right? It's not huge. Okay, so that might take it down to 1,120 at maximum, or if it's this other zone is more correct, then it's 1,215. So it's roughly $100 difference. Over on the grand scheme of things, where I think we're going for platinum, probably doesn't really matter too much. So we're in the belly of the best buy zone right now. For me, it's the best risk to reward. Could platinum just tank from here? Yes, of course. But I think around this general area, either that one or the one I just showed you is the general area, which is the best buy zone at the moment. Hence the name best buy zone, because I do think after this bit of a dip, wherever it dips to, we will just be moving onwards and upwards, okay, for platinum. Could I be wrong? Yes, but I don't think I am. Yeah, that is platinum. And finally, let's do copper. That's my full technical analysis for copper. Not preferable. Really not preferable. We did speak about this yesterday, I think, on the live show. On copper, we had, and you can actually see here, it is bearish divergence. We had it on the weekly time frame. It did play out. We pivoted here. That's a big pivot. That's a huge spike. I think that has to do with Jerome Powell's not cutting the rates. I think that sends a message that we're not out of the woods yet economically. Generally, they'll lower. Well, actually, is that true? I'll have to check my rhetoric on that. But I do think it was very well timed with the no cutting of rates this time, and then copper went down. So I think it's tied to that. And all you need to know for the moment is between this low, you can see that bearish divergence right here, higher high on the weekly price, equal or lower high, technically lower high on the relative strength index. That played out, seeing a bit of a move in copper down, and from on the weekly, if you take it from this low and this high, the expected support range or the zag zone, no lower please than $4.20 something. Do not close below there, bad, because that's also a bunch of buyers here. So the question becomes, and that's resistance here, so it's a very key level, all these buyers here as well. So the question becomes, if they're not buying in this general area here, it's kind of a support zone. Question becomes, why are they not buying here? Why are they not buying here? If it's closing through here, this area, if you get down through here, it's like, whoa, why aren't these buyers here, still buyers here? That's really not good for copper. Okay, so on balance of probability, I think we do probably find some support there, and let's fingers crossed. Now, I don't think I'm in any copper stocks at the moment. So I'm actually not invested in physical copper. I wouldn't probably buy physical copper. You can if you want. You can get it from certain bullion dealers. The premiums are quite high. Unlike silver and gold, where they're more normal premiums, you'll pay a much higher premium for physical copper. The way you can get into copper is by buying stocks on the Australian or other stock exchanges, which are copper miners, for example, or related to copper in some way. Or you can even buy something like, and I'll quickly show you this. This is the COPX. This is the Global Copper Miners ETF. So basically it's an index fund. It's an averaging of, a whole bunch of different copper miners. So where the copper mining stocks go in general, the COPX will go in its stead in the same direction, but just in a smaller percentage. Okay, so it's just a way to get exposure to copper miners without exposing your risk to individual ones that might, something happens to the individual company. So on COPX though, I must say COPX is looking far more okay than copper itself is, because we just, from this high and this low, we broke through the zag zone, so the expected resistance range. We got right through it. We found exact resistance at the 0.786. Right here again from that high and that low, and we're just testing the waters here, and here's that downtrend line. So I would suggest if we bounce off here would be really preferable. Do something like that. Maybe it does that. Again, ignore the time frame, ignore the pattern, but what we have to do is get back above that $43.90 area. This is listed on the New York Stock Exchange, by the way. And then we've got to clear, bare minimum, got to clear that $47.50 level. You do something like that again. Ignore the way it happens, ignore the time frame. You do that, then I'll say, okay, onwards and upwards, we're looking really good. Cool. But if you fall back below this downtrend line, particularly if you fall back below here at $38.40, and that's a bunch of resistance here. So why isn't, if we get down here, why isn't previous resistance, as it was support here, it was support here, it was support here, a quick little flash down. Why is it not support here? Why isn't it doing that? Why is it going down? Be very worried if you don't hold that $38.70 kind of level. Okay, we can spike down, that's fine, but if we're not closing weeks around that level, you got to wonder why. So anyway, so far looking actually better than general copper. That has been your general precious metals update for the 1st of August. Isn't that amazing? And of course, if you want to buy precious metals, which I know you do, of course you do, I would love you to head over to Perth Bullion Exchange, perthbullion.com.au, as I do this completely on the fly. Is it going to come up for me? Maybe not, I'll wait for that one. Yes, it is, perthbullion.com.au. The best bullion dealer in all of Australia. They give you free shipping when you have 20 or more items in your shopping cart. It's pretty simple. Go to perthbullion.com.au and at least have a browse around. You'll see that their prices are amazing. They even price match against other major bullion dealers as well. So they do have a price match guarantee with a couple of caveats. 20 or more items in your shopping cart, one of this, two of that, mix and match, you get free shipping. Sign on delivery, express shipping too, not just sending it via regular parcel post. Okay, express delivery, sign on delivery, very secure, fully insured as well. All the other things you get from every other bullion dealer, except you don't pay for it because you bought over a certain amount. Oh no, it's so terrible to give people free shipping when you buy over a certain amount. What other bullion dealer in Australia is currently doing that? Tell me. None. I think maybe one. But perthbullion.com.au and Mastering the Markets, masteringthemarkets.com. An amazing educational course, which I am doing. Currently, I'm in week 2 of their year-long comprehensive course. Now, on my live show on Thursdays, what I do is I give you a little sneak peek. Okay, I'm not teaching you the whole course. I give you a little sneak peek. I do a little segment called What I Learned This Week, where I basically break down the concept that we learned that week, and I give you a live example. And it's a way for me to know that I'm understanding the concepts correctly if I can kind of teach the very basics of it to a brand new audience. Okay, so head over to Mastering the Markets if you think you might want to sign up for one of their courses, and of course subscribe to me if you want to get the little tidbits every now and then, but it's just to wet your whistle. Okay, it's Mastering the Markets, masteringthemarkets.com. Let's do a final synchronized slurp when I go live again on, why's my door open? When I go live on Tuesdays and Thursdays, we do a full synchronized slurp. But let's grab your tasty beverages. Ready? Whatever you're drinking, slurp it with me now. Go. Thanks for watching, people. Stay safe, stay informed, keep stacking whatever you're stacking, and have a great weekend, and I'll see you soon.